Hello, ladies and gentlemen. Good morning from this part of the world. It's 9:36 a.m. West African time, and that's about 8:36 a.m. UTC. And as always, I'm very, very excited to welcome you all to another promising edition of the Forex Morning Mastery. Well, happy new month. I think this is the first time we will be seeing this month. And I, of course, wish you a blessed, profitable, and successful new month. Today, as always, we're going to be delving into the financial market where we are going to be reviewing our performances through the course of the month, through the course of the week. Remember, we have been monitoring three financial instruments since the week began, which includes the USOILSPOT, the GBPUSD, which we newly introduced into our watch list this week, and of course, my favorite, the XAUUSD. Today, we are going to be looking at how well they have done and how we will be managing existing position as we also strategically position ourselves for the second half of the week. And before we go into the market details, I would love to welcome newcomers in the house. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very excited to have you around with me this morning. My own name is Sheriff Daramola, and for the next 45 minutes, I'm going to be your host as we shall be deliberating on what we want to be doing as regards to capitalizing on the next big move. So, the Forex Morning Mastery is an educational avenue where we all come together on this platform 3 times in a week, Mondays, Wednesday, and Fridays, to try to understand how market participants are digesting the fundamentals using the technical analysis to understand this and position ourselves for the next move. So you don't want to miss out on any of the sessions. So save the timing, and love to see more of you in the session, and of course in the comment section. And do not forget to give the video a thumbs up if you found the video helpful and useful in making your independent trading decisions. So moving on, the first thing we are going to be doing today is to hold on a second, please. I want to move my stop loss on this particular trade I took this morning. Hold on, please. Okay, so sorry about the break. I had to adjust my stop loss on a particular trade I was taking. So, like I was saying, before we jump into the technical details and, of course, the market analysis, I would love to shed some light on the latest development in the US dollar market. You all know the US dollar is the baseline of every of the financial asset we are monitoring. And currently, the US dollar is caught between two major forces, that is the economic uncertainties and geopolitical risk. And on one hand, expectations of Trump's new trade tariffs could shake up global market. Remember, today is the day it's going to be taking effect. And we've been seeing how the anticipation of this um, tariff implementation is creating uncertainty that may likely, or let me say, might either boost or weaken the US dollar depending on how investors react. Now, on the other hand, rising geopolitical tensions with Russia and Iran are making markets nervous at this point, which usually strengthens the dollar as investors look for safety. And at the same time, the US economy is showing mixed signals. While job data is improving, inflation remains high, meaning the Federal Reserve may need to stay cautious about cutting interest rate. And this may likely exert pressure on the US dollar, of course. So we don't, these are theoretical speculations, but it depends on how market participants react or digest this information that we are going to be banking on to capitalize on the next move. Meanwhile, in the US oil, we saw some very strong moves during the beginning of the week, and thank goodness we were able to capitalize on that move as we saw rising oil prices from supply risk, which further fueled inflation, making the Fed's decision even tougher. So for the rest of the week, we are going to be watching out for Trump's trade war plans as it unfolds. We are going to be looking at upcoming economic data for this week. In fact, we've had a bunch of them through the course of the week. I thought I had my screen on. Sorry about that. So I think we have a bunch of them which has been happening, and it has had some significant effect on the US dollar market. For instance, look at what we've been looking at. So we shall be focusing on the major events. So we never had any on Monday. So on Tuesday, we had the ISM manufacturing PMI, a data that gives us an insight into how well the manufacturing sector in the United States is doing. And it comes in an index where we have between 0 to 100, and anything above 50 is considered to be an expansion in that sector, while anything below 50 is considered to be a contraction. And from the look of things, the last couple of months we saw the manufacturing sector doing pretty well, let's say averagely well, as the figures came in above 50. But for the month of March, economists had been projecting that there's likely going to be a decline, and they pegged it at 49.5. But when the data came in on Tuesday, we saw it pegged at 49, a little bit lower than the market expectations, which tells us that the manufacturing sector may be struggling at this point in time. Then we also saw the API weekly crude oil stockpile, where we saw a massive increase in crude oil stockpile in the United States. And we all know what that means. It tells us that supply has increased. And when supply increases, what happens to prices? Prices definitely will fall. And this has been one of the major reasons we've seen oil prices drop in the last 24 to 36 hours. We are going to be talking about that in details when we go into the US oil spot. So today, Wednesday, April 2nd, we are looking at a couple of high impactful event today that everyone in the market will be looking forward to. And of course, we know how the anticipation of this major event has a massive influence on how market participants will behave, which obviously reflects on the chart as price action. So today we are going to be looking at the ADP employment change. This is a labor-oriented data that is a gauge of employment in the private sector, and this will it measures the change in the number of people privately employed in the US economy. Now, if the data comes in higher, it is traditionally seen as bullish for the US dollar. So, and if it comes in lower, it will come in the opposite way. So, from what we have here, economists and market participants are projecting that the data will come in at 105,000, way above the previous month, which was at 77,000. So it shows that there has been a light of hope from the labor sector. And let's see what the actual data will be. Will it come in just as market had expected, below expectations, or even beyond expectations? And the timing for this event is 12:15 p.m. UTC. That's about 1:15 p.m. local time. So let's mark our timing for this one. Then the major event for today, which everyone in the market is looking forward to, is the announcement of the tariffs. This is coming in by 8 p.m. UTC. So this move could significantly affect global trade and financial assets. And this is one of the major events I think majority of market participants are looking forward to. So it's 8 p.m. UTC today. So if you have any trade before that time, I think it's advisable that we secure some profit or even get out of those trades because of the potential volatility that may likely come up after this announcement. So that's 8 p.m. UTC today. That's about 9 p.m. local time. Then, while this is all for today, I also want to address what we are going to be looking forward to tomorrow that will be influencing the US dollar, since we are not going to be running the Forex Morning Mastery tomorrow. So one of the major events I want us to be looking forward to tomorrow is the initial jobless claim count. This is coming in 12:30 p.m. UTC tomorrow. It's also a labor-oriented data, and it measures the number of people filing first-time claims for state unemployment insurances. So it gives us an insight into how many unemployed people are there in the United States. And of course, if the data comes in higher, it's not a good thing for the US dollar. So this one event I want us to be looking forward to. Then we also have the ISM Services PMI coming up 2 p.m. UTC tomorrow. The ISM Services PMI, just like the manufacturing PMI, it gives us an insight into the performance of the service sector in the United States. So with a range between 0 to 100, we want to see if it's going to be above 50 or below 50. And of course, the expectation is a little bit positive, though a little bit lower than the previous month. It is pegged at 53. So let's see what the actual data is going to be on that one. So let's mark out the timing on that particular one. So these are the events we are going to be looking forward to before our session on Friday's trading session. So let's go into the chart and let's see what is going on in the market. So the first asset we are going to be looking at today, of course, is the USOILSPOT. What a week we have here on the USOILSPOT. Remember, we bought the USOILSPOT at the beginning of the week, and we were able to maximize this bullish momentum by taking on three buy positions all the way into the $71.50 level before we saw this bearish traction happen. Now, for those of us who are not part of the Monday session, let's quickly have a brief on what we saw on this chart that made us to position ourselves for buying opportunities. So at the beginning of the week, there was a clear ascending trend line. Remember, we saw price trading above our ascending trend line, which we identified on the 4 hours time frame. And the fact that price remained above that ascending trend line was a sweet spot for us to continue that uptrend move. And during the early hours of the week, we saw a little bit of consolidation around that ascending trend line, showing us signs that sellers were finding it difficult to break down and comfortably retest that structure. Now, this gave us room to start considering buying the US crude oil spot. Then we went on to look at our key level, which was at the $69 area. As you can see here, you know how we use our key level. As long as price remains above the key level, we want to be looking out for patterns and structures that support buying ideas. And from the look of things, it shows that the market is leaning towards a positive outlook for the US crude oil, thanks to geopolitical tensions. Then we also talked about the OPEC Plus plan to raise output by 135,000 barrels per day in May, and this of course made a quick rally for the US oil spot. So we saw price breakout of key structures. We had one here at the $69.20 level, which was our first buy position. Then we added another one at the break of the $69.50 level. Then the final one here had the break of the $70 area. So I was able to make about 300 pips minimum on this particular trade. And for those of us who were fortunate enough to be part of this profitable move, well done and kudos to you. Now, if you still, I'm very sure everyone will be out of this trade by now. You must have moved your stop losses, and by the time this whole retracement move is happening, you must have been taken out of that position. But if you are still in that trade, I will encourage you to move your stop losses right now, secure the current positions as we begin to notice some bearish move happen here. And for me, this bearish situation is not coming as a surprise. We saw the API data yesterday, which shows a 6 million barrel buildup in US stockpiles, adding to the 23 million barrel increase so far in 2025. And this is signaling weaker demand in the US economy. We know when the crude oil stockpile increases, it shows that the demand in the market is not as much as the supply, so they have excess to keep. And as a result of this, we have been noticing some uncertainty around the US crude oil, where in the last 24-36 hours price action has been finding some series of lower highs and lower lows, but caught within a consolidation that emphasized the prevailing uncertainty at this point in time. Now, in as much as the fundamental supports a retracement move, so I'm talking about rising US crude inventory. We are talking about plans by OPEC Plus to increase production, which could limit oil price gains if demand remains weak. Then the Trump's impending tariffs could also slow economic growth. Now, if the growth in the economy is slow, what happens? There is no movement. People do not buy fuel, people do not buy oil, people do not buy energy, and what happens? Demand drops, and when demand drops, there will be surplus in the market, and when there is surplus in the market, the prices will definitely drop. So we are not going to be taking the potentials of the sellers out of the table. However, if we consider the geopolitical tensions, like the threat of secondary tariffs on Russian oil, bias, which Trump emphasized last week, and possible military action against Iran, which obviously may heighten supply risk, and this could support oil prices. Now, if we look at these two conflicting outlook, that is, we have an idea, we have a fundamental that supports the bearish expectation, and of course we have that which can also increase oil prices. But from this perspective, I'm beginning to lean towards price dropping to the downside due to the surplus and the surplus availability of crude oil in the US in the crude oil market. Now, we are going to be taking into account the two perspectives. We are going to be looking for how to buy and how to sell if the case presents itself. Now, if we are going to be looking for buy, well, if geopolitical risk escalates, especially if tensions with Russia and Iran worsens, this could increase prices. And if OPEC signals further production restraint or demand outlook improves, buying opportunity may rise. But if the EIA report that will be coming up tomorrow comes in higher again, it could exert selling pressure on crude oil prices. So how do we intend to strategically position ourselves for these opportunities? For those of you who are with me on my Telegram and TradingView platform, you must have seen the structure. So I will share them with you at this point. So look at what we have here on the 15 minutes time frame. And on the 15 minutes time frame, I captured the character of price action since it tested that highest point for this week at the $71.70 area. And look at what is going on here. The market has been a little bit choppy, though doing something like a retracement move. And we have a structure here to help us navigate this market this week, and this lies within this $71 area and the $70.78 area. If you look at the structure closely, since the later part of the New York session yesterday, we saw price trapped within this range bound, emphasizing the prevailing uncertainty in the market at the moment. And we could see this as market waiting for that announcement today. That is about 8 p.m. UTC today. And then we also have the ADP employment change report, which is also coming up today by, what time is that again? 12:15 p.m. UTC. All of this has a significant effect on. Then we have the EIA crude oil stock change coming up 2:30 p.m. today. So the timing of these events will have a significant impact in this market. So we are likely going to see some volatile movement during this time frame. So the structure we have here is what we are going to be using to help us navigate this market. So what are we going to be looking at? Well, if we have a range bound structure, you know how we do it. We exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range bound structure to give us an opportunity to sell. And of course, we can see since the my updates on this asset this morning, price already broke down the support line at the $70.78 level, which triggered my first sell position. And if you look at the bottom of your screen right now, you will see that the sell position is already triggered, though running in a loss of about 17 pips right now. So my stop loss is way above the resistance line at the $71 area. Hopefully the momentum will go to the downside, as I strongly think that market will be leaning towards the sentiment surrounding the rising US crude inventory and fears that Trump's trade policies could weaken global demand, which is looking very, very likely at this point in time. So for those of you who are yet to join this move, I'll suggest you have a sell stop order below the $70.78 level to capitalize on that downtrend move. Now, in as much as we lean in towards the bearish sentiments following the fundamentals we talked about, we are not going to ignore the potentials that buyers could also come into play. That's how we do it here. We try to ensure that we keep all options open as possible. Now, the geopolitical tensions, I'm talking about Trump's threats of secondary tariffs on Russian oil buyers and military actions against Iran, which could increase the demand for crude oil, or let me say affect the supply chain in crude oil, making this commodity scarce in the market. And when it is scarce, demand increases and prices rise. Now, if that is going to be the case, if that is what the sentiment in the market is leaning towards too, I want to see price breakout retest the $71 area before I feel comfortable to continue the uptrend move. So this is basically how I will be buying the US crude oil today for the second half of the week. So we have a simple structure, a range bound structure where prices confined between the $71 and the $70.78 area, where the breakdown or the breakout will determine if we are buying or selling for the second half of the week. So I encourage us all to mark out the structures accordingly on our chart, as we are going to be needing them as a reference point to help us navigate this market today. So that is my look on the US crude oil. If you have any questions whatsoever, feel free to let me know in the comment section. If you need some clarification, let me know in the comment section. I'm here and willing to be of help in that regard. And do not forget to give the video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. Why not give the video a thumbs up, and thank you very much as you do so. So I look forward to seeing you in about 5-10 seconds. All right. So I guess we are all on the same page. Hope you've marked out the structures, and I wish us all the best of luck on the US crude oil. And if there is any updates, or if there is a change of plan during the course of the today's session, I will be updating us with structural details on my Telegram platform. So best of luck, everyone. So moving on to the next asset on our watch list. So the next asset we are looking at is the GBPUSD. And remember, this the first time we will be trading the GBPUSD this year. after dropping the USDJPY, and we bought the GBPUSD at the beginning of the week. Remember, we were looking at buying due to the structure we identified here. So at the beginning of the week, we were able to spot a descending channel right here on our execution time frame. So to give a visual representation of what we are talking about, this is the resistant line of the descending channel, and then we have the support line of that descending channel right here. And something interesting happened on Thursday of last week, where we saw price break out of the resistant line of that descending channel for the first time in about a week. And ever since that breakout happened on Thursday, price had continued to maintain momentum above that particular structure. So we saw price come back to retest this trend line multiple times. You can see multiple times. And for us on Monday, this was a technical confirmation that buyers may likely be taking over the market this week following recession fears from the United States. You know, this was what we were talking about at the beginning of the week. We had weak labor market, we had rising inflation, we had recession fear, consumer spending was low in the United States. All of these, and to top it, the trade war concerns, the effect of the tariff policies of Trump was also a major factor that had been influencing the US dollar negatively. And as a result of this, and coupled with the technical structure we saw here, we kept the bullish bias. So we said we will maintain a strong bullish bias as long as price remains above the resistant line of that descending channel, and of course the key level for the week had a 1.29250. And since we bought the GBPUSD at the beginning of the week, price has been struggling. The buy position has not really done very well. In fact, most of Monday stroke Tuesday session, price was trading in red territory as price was below our entry point. But in the last 6, 7, 8 hours, we are seeing price climbing back into our entry zone, giving us some hopes that price may likely climb back up again. Now, for those of you who joined this move, well, I know there will be some anxiety in play, but for me, I already have my stop losses way below the 1.2880 area. That's about 50 pips of stop loss, and we are willing to risk that percentage of our account on this particular trading setup. So let's be hopeful that it will finally yield, and if it doesn't, well, this kind of thing happens when we trade. Now, what are the fundamental factors influencing this market? Is it leaning towards bullish or is it leaning towards bearish? Well, if you would ask me, considering the latest development as at this morning, the only driver that can influence the pound sterling at this point is Trump's plan to redistribute tariff collections to household via tax dividends, and this could stimulate the US economy, indirectly supporting global demand, including for United Kingdom exports. So that is the only edge I see for the pound sterling in terms of fundamentals. However, if we look at the other side, everything is pointing red for the pound sterling. We have the trade war risk, global uncertainty, and we also have a situation where we learned from there was this UK official, the Bank of England official, who said that the upend global trade war could negatively impact the UK economy as a warns of a potential 1% GDP contraction. That is very, very massive and not a good light for the pound sterling. Then we also have investors who have also remained cautious ahead of the major event for this week, and this is evident with this consolidation phase. As you can see, price has been confined within a range bound structure since the beginning of the week, emphasizing that major key players may have stepped aside waiting for these Trump tariffs details before making any aggressive bet at this point. Then we also have uncertainties over trade negotiations, which could weaken the pound sterling. And the UK wage growth report also showed its lowest figure in the last 3 years. We saw it rise by 3.5% from the usual 4% and above that has been accustomed to the UK wage growth, which is not looking promising. So if you would ask me from the fundamentals, it appears that the pound sterling does not have that vigor to rise to the upside from here. But if we look at the way market participants are digesting this information, you will notice that that area between the 1.2880 continues to be a solid demand zone. As you can see, every attempt by sellers to break through has always been met with strong resistance from the buyer. So sometimes we have some theoretical expectations, but in real life, the sentiment in the market is the major driver. So how are they digesting this information? For me, I see a barrier around the 1.288800 level, which makes me feel comfortable in this buy position. So we shall maintain buying opportunities, especially if Trump's tariff measures are less severe than expected, reducing the risk aversion. And if the Bank of England downplays the weak wage growth and maintains a hawkish stance, well, the pound sterling could find some support and continue to rise from the 1.29250. However, if Trump's tariffs are aggressive, the risk of sentiment could push the pound sterling lower. And of course, if the US ADP employment data that we are looking forward to today comes in higher, it could reinforce the Fed hawkishness, boosting US dollar and weakening the GBP. So if we are going to be selling the GBP, I still remain with the setup I shared on Monday, that I will only consider selling the GBPUSD if price breaks down and retests the 1.28800 level. Now, hear me correctly, not only breaking it down and retesting the structure. That's what I'm looking forward to, because the breakdown could turn out to be a false breakdown. It has happened in the past, as you will see here. We saw some false breakdown happen here mid-March, and we saw some false breakdown happen here last week as well. So it could turn out to be a false breakdown. So instead, we will exercise patience and wait for price to come back, retest the structure. We do want to see signs that buyers are finding it difficult to maintain momentum above the 1.28800 level before jumping into a sell. So that is what I'm looking at on the GBP USD for today. Let's see how the market plays out around this particular structure. Our buy position is still running. A little bit of loss it is at the moment, and I'm still hopeful based on this behavioral patterns of market participants that there's still some room for price to climb up. Now, if price goes up, please, as soon as price gets close to the resistance line at the 1.29720, please move your stop losses and secure the buy position, as anything could happen today as market participants look forward to the tariff announcement. So that is that on the GBP USD for today. If you have any questions, let's see. I'll give another 5-10 seconds. Let's see if there are any questions, and don't forget to give the video a thumbs up. For those who clicked on the like button, thank you very much. For those who are yet to do so, please support the community by tapping that like button. Thank you very much. See you soon. Okay, so let's move on to the final asset on our watch list. So the final asset we are looking at is my favorite, and that is the XAUUSD. And thank goodness we were able to scoop in over 300 pips, close to 400 pips since the week began. We had our first buy around the $2,086.50 level. This happened even before our live session on Monday. I projected this during my weekend video on YouTube and all my social media platform, where I was looking to buy since price still remains above the ascending trend line we spotted on the higher time frame. And since I was taken out of the buy position on was it on Monday? Yes, on Tuesday morning. By the time I came here yesterday morning, I've been taken out of the buy position, and I gave us some updates on both my Telegram and TradingView platform to move our stop losses accordingly. If you have done so, you definitely must have been taken out of the buy position. Now, from the look of things, we can see what happened yesterday. We saw what happened on Tuesday. Price hit another record high at a 3,145 level. The gold just keeps hitting record high thanks to geopolitical tensions and trade uncertainty. We talked about the concerns over Trump's aggressive trade policies and their global economic impact, which continues to bolster gold as a safe haven asset. And in the US economic front, we see market pricing suggest that the Feds may cut rates by 80 basis points this year, reducing the US dollar strength and making gold much more attractive at this point. Then we also talked about the slow economic growth and persistent inflation rise concerns about stagflation, increasing demand for gold as well. And all of this continue to support price of gold. Then at the beginning of the week, we saw a weak US economic data. We saw a decline in the ISM manufacturing PMI. Let me show you again. I think we have it here on Tuesday, right? ISM manufacturing PMI coming in lower than the previous month and even lower than what market had expected, making the gold much more attractive at this point. Then, in as much as gold is looking very, very positive to the upside, we cannot ignore the potentials that sellers can also come in. We are within uncharted territory, of course. We have overbought conditions right now, with gold recently hitting an all-time record high. Traders may hesitate to push prices higher until fresh catalyst emerges. Now, as a result of this, we could be seeing some profit-taking activities happen and ahead of the weekend, which could incite some selling pressure, which I'm not going to be taking out of the table. So we need to also take that one into account as well. Now, how are we going to be trading the gold today? How are we going to be buying or selling? Well, for me, I want to look for dips around major support levels, especially if Fed rate cut expectations intensify or geopolitical risk escalates. And that I will be sharing with you on the 15 minutes time frame. And if I want to sell, I'm going to be watching out for exhaustion signals if gold struggles to hold gains amidst strong equity market at this juncture. So I shared an update on the 15 minutes time frame For those of you who are following me on my Trading View and Telegram platform, you must have seen it. And if you had seen it, you must have taken that trade. As you can see at the bottom of your screen, we're currently running with about 140 pips in profit. Now let's look at the structure I shared this morning. This was what I was looking at after considering the character of price action since the new month began, the new month of April. Now the first thing I noticed here since the beginning of this week was how this area between the 3,100 and the 3,105 had become a barrier for sellers. Every attempt by sellers to break through has failed at every point in time, making it a strong demand zone going forward. And with a strong demand zone, it is not advisable to consider selling within or above a demand zone. So as a result, we are looking for buying ideas. Then in addition to that demand zone is this descending channel I identified here. Then I spotted this level at a $3,115 level. So this was where price action was when I updated us this morning, and I said we should be buying the breakout retest of the 3,115, and this was exactly what happened. We saw price breakout retest, and look at what is going on right now. We have over 140 pips in profit at this point in time. So for those of us who capitalize on this opportunity based on the signal I gave this morning, well done, kudos to you. So the next thing we are going to be doing right now is to move all stop losses and secure the position. We are at a crucial juncture right now. Look at the resistant line of the descending channel. So price is back within that resistant line. And at this juncture, we could see price drop to the downside, where the breakout we see here could turn out to be a false breakout, turning out, pushing price to the downside. So you can see why it is very, very important that we move all stop losses, secure the current position. And if you would ask me, I would love to move stop losses to anywhere between the 3,128 area. Of course, we do want to be given enough breathing space, and the 3,124. So I will do that right away. The last place I placed my stop loss was 3,118, so I will need to adjust it again. So looking at 3,124, so place it right there. So you can see that at the bottom of your screen, I already moved my stop losses accordingly, while we monitor the character of price action around this resistant line of the descending channel. So that's what I'm looking at today. So let me zoom into the current structure. So we have a situation here. Now, if we notice a double top structure here, that says price forms a double top structure. If you are a day trader or a scalper, you could take the breakdown retest of that structure, maybe back into the $3,015 area, which dovetails to about 820 pips. But for me, I will not be doing that. I will just exercise patience and wait for price to come into the 3,115 before I join an uptrend continuation. Now I'll explain to you why I'm doing that. Now, if you look at this breakout here, the breakout is coming off a double bottom structure. So let me give a visual representation of what I'm talking about. So we have the lowest point here, price came here, then we saw price come back here, then we saw this move all the way to the upside. So we have the neckline of this double bottom structure somewhere around the $3,818.50 level, right? So let's mark that level appropriately. So $3,118.50 level, right? So there we have it. Okay, so that's a neckline of the double bottom structure we saw here. Now, whenever price action breaks out of a structure, theoretically, we expect it to come back, retest the structure to continue that uptrend move. So what I will be doing now is, if it so happens that we see selling pressure persist here, pushing price to the downside, I want to wait within this neckline area to join the uptrend continuation. Like I did from the fundamentals, the buyers is looking very bullish. Remember, we talked about the geopolitical tensions, the trade uncertainty, Fed rate cut expectations, recession fear, and of course weak U.S. economic data, all of which are supporting this uptrend scenario. So I will, if price drops and respect this resistant line, I want to look for buy pressure around the $3,118.50 level to continue the uptrend move. So that is what I'm looking at to trade this one. So we currently have a buy position running. We've moved our stop losses and secured the current buy. It's now 150 pips in profit. So let me move my stop loss again to 3125. So I'll just move my stop loss to 3125 right away now. So you can see it at the bottom of your screen. So I just moved it to 3,125. Now let's see how far this is going to go. If we get taken out, then we wait for price to come into the structure to continue the uptrend. So I will definitely be updating us on both my TradingView and Telegram platform. So to sell from a long-term perspective, I'm not looking to sell right now, but if you're a day trader, like I said earlier, you can be looking at capitalizing on a double top if you find one there, and looking at TP between these 3118 and the 3115, which will be dovetailing to about 120 pips. So on a long term, I will not be selling the XAUUSD except if this demand zone is breached and broken down. Yeah, I'm not going to be selling unless this demand zone is breached and broken down. That is, breakdown, retest structure. That is the only condition that will make me sell. Anything other than this continues to remain bullish for me. Price remains above the demand zone, above the trend line here, making a beautiful support for the next level, next move to the upside. And of course, the fundamentals continue to support an uptrend continuation. So there you have it, my in-depth look at the XAUUSD for today. Trust me, anything new that comes up, I will definitely update us on both my TradingView and Telegram platform. So that is my idea here. If you have any questions as regards to the current setup, feel free to let me know in the comment section. And once again, congrats to everyone who capitalized on this 150 pips move this morning. Well done and kudos to you. So let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. And don't forget, give that video a thumbs up, and thank you very much as you do so. All right. So in the absence of known questions, I guess we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really do appreciate your support, your presence, and it has been a great week so far for us on the assets we've been monitoring. The USOILSPOT, we've done pretty well. We had over close to 400 pips on the first 2 days of this week, and we are looking to build up on that. Then the GBPUSD, which is currently struggling, we are roughly break even or a little bit of loss at the moment on the GBPUSD, while on the XAUUSD we've done tremendously well. And once again, congratulations to everyone who was part of this profitable journey. And we were able to identify simple trading setups on all of these assets as we venture into today's trading session. I hope you all mark them out accordingly on your charts. Please make sure you do so, as they will be serving as a reference point to guide our independent trading decisions today. So I want to wish us all the best of luck. And that reminds me, for those of you who are joining us for the first time, I hope you are able to gain one or two things from what we have discussed here today. If you did, you want to be part of our subsequent editions, trust me, the more time you spend with us, the better you get to comprehend my analytical approach. So I look forward to seeing you on Friday again. Same time, 8:30 a.m. UTC, 9:30 a.m. West African time, as we come here again to review how well these assets have been doing and, of course, prepare for the final trading day of the month, which also promises to be another volatile one. Remember, we have the NFP coming up on that day. So I wish us all the best of luck till then. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.